I get asked a lot about loan options for beginning investors. Maybe you don't own any property right now and you want to jump right in and get into investing and be a landlord. Or maybe you own one property and how do I buy my first rental? All right, so let's get into that. First things first, when you're buying an investment property, that's different than your primary residence, the home that you live in, from a down payment standpoint. So want to be really clear on that. Typically, most investor programs are going to start with a minimum of 20% down. We actually have loan programs that will allow you to put 15% down. Now, 15% down works in select scenarios because, let's be honest, the difference in that 15 versus 20, you're gonna have mortgage insurance and you're gonna have a really big interest rate adjustment. So if you can get to 20, do it, but I understand at times you can't. And maybe that deal, that scenario, you're buying it really right and you just can't get to 20%, that's okay. Now, as far as programs go, you've got fixed rate mortgages. So you've got 40-year fixed, 30-year fixed, 20, 15, 10. Typically, I don't recommend going for less than a 30-year term unless you're over 60 years of age. Before 60 years old, you're still in your earning years. You're still making income. I think that you can really impact your cash flow by taking your income and buying other investments, whether it's more real estate or stocks, equities, low-cost index funds, cryptocurrency. That's a whole other class. But we're talking about, new investors in programs. So you've got an array of fixed mortgage products, and you've also got adjustable rate mortgages. ARM, and typically those start at 3 years. So you've got 3, 5, 7, and 10. So 3-1, fairly common, and that rate and payment are fixed for 3 years and then would adjust annually after that. 5-year is going to be fixed for 5 years and then adjust annually after that. 7-year, 10-year, so on and so forth. Big thing with investment loans is that you're gonna get part of that rental income. What's common is 75% of gross rents as additional income to help qualify. So in a lot of instances, it's actually easier to qualify for an investment property than it is a primary. Simple example, let's say you're buying a property that's gonna rent out for $4,000 a month. These are long-term rents. I'm not talking Airbnb, different video, different topic. But long-term rents monthly would be $4,000. 75% of $4,000 is $3,000. So you get $3,000 in additional income to help you buy. So that's really huge in helping you qualify. Now, there's also programs where we look at what is the debt, meaning the mortgage, debt service, so principal and interest, monthly taxes, monthly insurance, HOA if it's a condo, part of townhome, there is an HOA involved, versus the rents and what's coming in and what is the ratio to cover that. Is it 75? Is it 100? Is it 110? Is it 125? But those are really underwritten based upon property, the income, and the cash flow, less of a focus on your personal income from your W-2s or pay stubs or tax returns, depending upon where your income comes from. The beautiful thing about investment loans is there's flexibility, there's room for you to be creative. You can get in and buy one unit, a duplex, you can house hack, buy a duplex, live in one unit, rent out the other one, buy a triplex or a 4-unit, live in one unit, rent out the other 2 or 3 units, using the rents, 75% of the gross rents on those other units that you're not living in to help you qualify. So there's really some great flexibility there. All right, let's do a quick recap on what we just covered. So first, there's fixed rate mortgages, 40, 30, 20, or 10. That gives you stability in interest rate and payment, predictability in your budget and cash flow. Then we covered adjustable rate mortgages where you may save on the rate, lower payment, increased cash flow, but you just want to be confident you know when they can adjust. And if you choose to pay interest only versus principal and interest, what does that impact on the scenario? Remember, we're going to use extra income from the rents to help you qualify. You've got programs starting with as little as 15% down, 20 is most common. So there's a lot of great tools and products for you to take advantage of. As you're an investor, lean on me as a resource. I'm happy to help review any scenarios or answer any of your questions anytime. Thanks for checking out my video and my channel. If you like this and you found it valuable, share it with a friend, subscribe, comment. Let's get it out there so I can keep making these videos and helping more people. Now, there are other videos in the library with similar topics like this. Stick around, check it out, click below.